Morning team, Mike here, Saturday, January 25th. And today's lesson, we're going to talk about organizing our open trade management, which was suggested last week as a topic to look into. But before we do that, just for the sake of those folks that are new, I want to take a real quick, here, let me get rid of this. Real quick view of the website and where everything is, okay? Log in, you'll get that information in an email. Sign in, go to your membership, Insider's Edge VIP, and it's really laid out intuitively now. You go through these in order. There's 6 steps to getting started. And your experience here in the coaching sessions will be way better if you've been through all of these, okay? So I'm assuming everybody launched the software already. It's real simple. Just click on the insidersedge.pro link and go fill out the form. And within a short amount of time, you'll be registered on the server and you'll be able to use the software. First lesson is on scanning for insider buys. That's one of our leading indicators. Watch that. The next one is for options beginners only. If you trade options, you do not need to watch this, but you're welcome to. And then you get into unusual options. How do we determine which of those candidates are the best? Another lesson on exit strategies, an excellent recording with 10 or so different ideas on exiting trades. And then a little bit on psychology, okay? Now, what you have today that I want everybody to do, if you haven't already, is click on the spreadsheet downloads, and there is a new document here called Insider's Edge Option Tracking version 3. And this is what we're going to go over. This is how I figured out how to organize myself and maybe you, unless you have any better ideas and you can contribute them. But it's the way I'm organizing my management of this portfolio on a daily basis, as well as, the end result of that management is open trade management because they're open, or soon to be. Okay. So go ahead and download that. It is an Excel file. If you don't have Excel, we'll get it to a Google Sheet eventually. In fact, if anybody here is really, I know it's pretty similar to Excel, but I haven't really used Google Sheets. If anybody is a Google Sheet guru, go ahead and just build it for us and email me or let us know how to get a hold of it, and I'll put it up somewhere somehow. Again, I'm not familiar with it that much, but that way everybody can use it because it's web-based, it's Google, it's not an application like Excel. But that's what I use is Excel. So, all right, go ahead and do that. Get that on your computer. And if you haven't tuned up your trade plan recently, go through the personalized trade plan course and do that. And then there's all the other recordings. All right. Now, one thing I do want to mention over here on this avatar here, if you click on it, you'll have settings available at my company. And I want you to scroll down here and make sure that all your notifications are on. If you don't have these on, you're not going to get my emails sometimes. And then the other thing that I found happens on occasion is people will accidentally or maybe even intentionally click on the unsubscribe button or link in the email. And that's no good because you won't get emails from me. And I email every day important things about this membership. And then the other thing is, again, it's happened a few times and it's a hassle to fix, is if you mark any of my emails as spam, I can't do anything about it. that's an issue that's important to the technology. Once you mark me spam, then you're going to have to come up with a new email address to get my stuff. So don't do that, and you should be all okay. All right. So that is pretty much it for the website and for those new. All right. Let's see. Anybody else new show up? We got Jim. We've got John Vargas. Welcome. Mark St. Michel. Welcome. And that's it. Okay, great. All right. So today's lesson is going to be on organizing our open trade management, at least my first pass at it. So again, I'll repeat myself. Everybody has a different way of organizing their work, and we'd like to hear, improvements to what I'm going to show you, changes, things that you do that are helpful for you. You want to share them with everybody else here, please. All right. Now, the trade plan sequence, I mean, it's a lot more involved than this, but the sequence of it is basically we look for setups, and those setups are basically just candidate selection. We don't actually have fixed entry and exit rules in our strategies. Why? Well, because they're both very personal. Everybody here comes to the table with some knowledge of trading entries. They're using supply and demand. They're using technical indicators, other things that you've developed over your career as a trader, and you like them and you're going to keep them. Same thing on exits. So our strategy gets its edge by the candidate selection. And we know that for a fact through academic research, but also through the last almost 2 years of trading it and the tremendous gains most of us have been getting. So that's the first thing. And we go through candidate selection every single Saturday in our workflow, so that we don't have to do anything special to do that. Entries, we're going to take a look at various entry ideas next week. Today, I wanted to, answer what most people wanted to get a handle on from last week, which was, how do I organize all this stuff and keep up on it? So that's what we're going to do today. On exits, that recording, as I already pointed on the website, is there in the top 5 or 6 videos. So review that. And then a couple weeks from now, we'll go over review process, which is critically important as well. So today we're on organizing open trade management. Now, I've created a new spreadsheet to track your portfolio, and I believe manage your portfolio easier. And the reason I say that is because while I've been using the original portfolio management spreadsheet, I've had this side thing that I do to try and keep up on it every day. And what I did was I integrated it into the spreadsheet. So the new version, as I already mentioned, is downloadable on the website for those of you who just showed up. Hi, Cheryl. Welcome. Okay. Good enough. Then let's go ahead and show you the worksheet, and I'm going to just give you a demo of what it's all about. Okay. Now, I just populated it with a few different trades, from my spreadsheet, just to give you a demo of it. Okay. But it's a simple Excel spreadsheet. Wherever you see white is where you enter in your information. Wherever you see yellow is a formula. So what you don't want to do is type in a formula column, because if you do, you will override the formula and you'll have to repair that. Now, you can repair it pretty easily by just going to a cell below and copying and pasting back. So it's not catastrophic, but it might be a hassle. So try not to type into the yellow columns. All right. Now I have, I believe I did. Yeah, I have the top column row frozen so that as you scroll down and build your portfolio, it'll always be up there for your convenience. Okay. So let's take a look at the column headers. The first one is trade number. The reason I would like you to do this, and it's got nothing to do with the date. It's just keep adding a number here. And the reason is we're going to show you how to sort this data so that it's easier to manage your open positions. And in some cases, you may want to go back to the original layout, and in which case you would simply highlight that first cell, and you would go Control DS. Well, not Control DS. Alt DS. And this is in Excel, not Google. As soon as you do that, it allows you to sort all the columns. So you go ahead and pick which one you want to sort by. And I could go up here to trade number, and I could say, smallest to largest. It already is that. But if I said largest to smallest and went okay, it would just reverse the order of them. All right. And that is how you would sort any of these. So what I'm going to show you for managing this is the status column is what we're going to do. The way I have it kept from day one is entry date, right? So I've got it sorted the oldest to the newest. And, but if I want to go to just what trades are open, I would go and sort it by status and put the opens all at the top so that I could go ahead and add whatever action I'm taking today to that. So let's say you had, like in my case, I'm coming up on 300 trades in my spreadsheet. Some of the open ones are back a few months. So the easiest way for me to just organize them so that, Monday morning, I can just take a look at, all right, what are my open trades? And look at the charts or whatever other techniques I'm going to use to manage them, and then put an action item in, right? Now, these are actually real trades I took, and this is one that I just use it as an example. Schwab, this was in at 96 cents, out at 275, out at 270, got one more contract left. So earnings have passed already. I don't see any need to hold this, especially since it expires on the 7th. So time decay is going to start to kick in a little bit. So I'm just going to exit on an up candle beginning of the week. But that's just an example. I'm not suggesting that you do that. All right. So that's what the action today is. And we're going to go through a process in a minute. I just want to describe the columns. Entry.
And hey, Mike, it's Nancy. Where's the total profit and loss?
We'll get there. It's just
okay.
It's off the screen right now. We can see what Nancy's focused on. Woo, none of this detail work. What we want to see the money. No worries. All right, entry date.
Show me the money.
Yeah, I love it. Symbol is self-explanatory. Now, I think that it's important to know which strategy you used for the trade, because as you build a data set, you'll see the difference between, only an insider's edge buy, only a UOA buy, or if it was a combo. And in fact, you may even use this strategy for other rule sets, and I do. Like I have one called SD zones, because I'll take swing trades based on Thomas's indicator SD zones, which is basically supply and demand theory on turbocharge mode. So if you're going to keep other trades in here, and I don't see why you wouldn't, because the purpose of this spreadsheet is for you to sort it every day by open and be able to take some actions on each of the items, right? Stock price at entry, strike if it's an option. You'll notice that first one there was an IE that did not have any options. It was only a 62-cent stock. So it doesn't have anything going in there. Um, my spreadsheet has earnings already populated. I would put this in as soon as you know what it is, because you're going to want to keep that handy every time you populate a trade. You want to know when's that next earnings. So enter that in. And then entry price and quantity. Now, the way the spreadsheet works is it'll automatically, or excuse me, it will not automatically take, like, say, 4 options contracts and make it times 100, because there are certain cells that that aren't going to be options. So if you have 4 contracts, just put the number of shares in: 400, 600, 1,000. 4 contracts, 6 contracts, 10 contracts, 4 contracts. You get the idea. All right. So in quantity, type in the actual number of shares. Now the bet size will be calculated automatically. That's real simple. And now the way I have it set up is getting out in 3 targets. If you want to do more, it's pretty simple. All you'd have to do is insert some blank columns and copy and paste uh, the date, the quantity, the price, and the G&L for that. Like if you wanted T4, right? You would go ahead and insert 4 columns, copy and paste this, change it to T4. And if anybody wants me to do that for them, that's fine. I can do it. 4, 5, 6. It's really easy for me. If it's not easy for you, then just let me know. So I've got it set up such that there's 3 columns, 3 exits. All right. So I've got the date it happened. In this case, on that first stock, AKTS, quantity of 500. I got out at 65 cents for a really minor profit. You may wonder why. It was a trailing stop. The stock had gone up, and I didn't hit a target to sell it at yet. So by the time my trailing stop got hit, that's where it ended up. So you'll notice there was no T2 or T3 for it. That terminates the data collection for that trade. And to Nancy's question, there is a total G&L in dollars and percent over here. So you notice you got, $14, whatever. Now I didn't adjust for commission because it's pretty much not relevant. If you're trading stocks, you're not paying any commission anyway. And if you're trading options, you can factor it in if you want. But, based on this and the fact that everybody has different commissions, I just chose not to put it in. And then so the total G&L and G&L percentage automatically calculate. Now this is real nice because this shows you your entire historical portfolio. Now what this formula does, and I should right now make this yellow so nobody overrides this code. This looks at every single trade. In this case, 300. It goes to 300 rows. Once you've got more than 300 trades, you will need to adjust this number, right? So all it does is it goes down this column and it says, all right, if it's a winning trade, count it. If it's a losing trade, it'll count it here. And then what it does is it takes all the winning trades and gives you an average, and it takes all the losing trades and gives you an average. And then it'll tell you what your win rate is, your risk to reward, and your overall G&L. So it's real handy, and it's right there at the top. Now, obviously, once you get down here and you're on your 140th trade, you can just zip right up to see how you are. And every time you launch the software anyway, it'll pop up here. You can see how your portfolio is doing. Okay. So as far as this note goes, there's a uh, little red signal type thing up there in that trade number. And if you click on that and you go to show hide note, it'll get rid of it. I just had it enabled so that everybody could just kind of read it and understand a little bit about the spreadsheet. So I'm going to go ahead and disable the note and not have to worry about that. All right, so let's take a look at a couple of different types of trades here and how they got populated. We went over the first one already. This was a stock and it never hit a target, but the terminal price of the trade was here, so I entered it here. Technically, you could have entered it here or here. It doesn't really matter. As long as there's no data in the other two columns, you'll get an accurate number of what your gain or loss was. Now, here's a losing trade. And again, I put it in right away. This thing went to expiration and never hit a target. So all 400 shares, that is 4 contracts, were entered in at a T1 price of 0, which does this. It shows you what you lost, which in my case was what I put into the trade. And then nothing in the other columns. And it carries over here to 328 and negative 100%. Now here on TRIP, this one was 606 contracts. I have my date, sold half of them at 87 cents, and then sold another 200 of them at $1.20. And then the final 100 went to 0. So scaling out of this, got a little bit of money, and then lost the, whatever it was, 55 cents, $55 here for a net of that. So you see how I ended the trade. Winner, winner, loser. Palantir, this one was one that was scaled out with 1 win, 2 wins, 3 wins. And I already showed you Schwab. Schwab is still open, out one win, a win here, a win here. And now I've got 1 contract left to finalize the trade when I get out of it. And those are the kind of permutations you're going to have. Again, you can decide which column to enter your ending one in. I just make it visually simple by making the first column my terminal one if indeed that terminates the trade. Okay? So that's a mouthful. But as my mother used to say, I was a chatty kid, so I can do that. Let me read the can you freeze the stock name row column? Yes. Stock name, you go to symbol, highlight it, right? And you go up to view and you go to freeze panes. But bear in mind, if you freeze, let's see, that's the first column. Yeah, I'm not sure. Maybe you can freeze it, but I know you can freeze the first column, this one, and the top one. If you want to sort by symbol name, that's simple. But if you want to freeze it here, my advice would be to just move the column to A over here. And then you can freeze both of them. I'll show you just real quickly here. I'm going to go Alt-I-C, insert column, Alt-E, Alt-T, excuse me. ET, Alt-ET will cut the column. Alt-EP will paste the column. Alt-ED gets rid of the blank column. And then you can go ahead to view and freeze the first column. Now, the first column is freezed. And the top row is not. Hang on a second. I guess you can't do both. Maybe you can. I don't know how though. All right, I'm going to change this. Just go back to what I did. That's all right. Okay, that's a little big. Let's turn this down. All right, please. I think there's a way to lock the columns with formulas so they can't be overwritten. Probably. Go take a tutorial and do it and share it with us. Click on B2 and freeze panes to freeze both column and row. B2. Click on B2 and freeze panes to freeze both column and row. Cool. Didn't do it for me. All right. I'm not going to not going to spend any more time on that. You guys can figure it out. This is not urgent stuff here. Unfreeze panes. I like the top one frozen. Freeze top row. Okay. All right. So that is, let me just get all these visual. That is the document. Now, how to use it, okay? So you got to imagine that you've got this page filled with trades, right? Some are open, some are closed. You would click up here to the far left so that all the data is highlighted. You got to make sure all of it's highlighted. I take that back. You want to go from A to AA. You want to leave this alone. You don't want to sort that. So you highlight all the columns, and then you would go Alt D S. And I would say, okay, I want to sort by status. And I want to see all my open ones at the top, and it just moved it up there. And it captured all that data. It saved all that data and moved it up to the top. Okay. Now what'll happen is you'll go open up your spreadsheet and after you've done this, you'll look at it and say you had 12 trades open. Here you go. The top 12 would be at the top of your data, and you could start going through and looking at the charts, looking at earnings, looking at the expiration date, and making decisions. If you have you could also sort by earnings date. Like, let's say you had a lot of positions, like I have 30, and I didn't want to really go through each one of them, but I want to take a quick look at who's coming up on earnings. I could do the same thing. I could sort by earnings. Same thing on expiration. I use this sort a lot because I'll go in, in the morning, and I'll say, all right, let me just manage the ones that are expiring in the next 2 weeks, as opposed to looking at something that's, got an expiration of March or February. I don't really need to jump on that just yet. So sorting by expiration date will give you your really important ones that you got to deal with. Okay. All right. And that's pretty much it. So let's get interactive here, and open up your mic and mention anything you can see that would be a good addition to a tool like this to manage your open positions. And we'll talk about the decisions you make in a minute. I'm just going to end off on the tool right now. Anybody? Pretty much what's probably going to happen is you're going to use it, and then you're going to say, I wish it did this, or I don't like the way it does that. And, if you're adept at Excel, change it and let me know, and we'll take a look at, updating the template. If you're not adept at Excel, then, go ahead and email me and say, this is what I think we should do, or what I'd like to do. But yeah, having used it, you'll get more of a feel for that than now. By the way, these colors here are I just do this manually. As soon as a trade becomes a loser, I color the text red, winners are green, and open are black. It's just a visual thing that I like to do. You don't have to do that. And it doesn't do it automatically. Oh, okay, Whit, thanks. Yeah. Yeah, it's pretty, there's no real, scientific programming here. It's just, it kind of flows with what I want to know and allows me to sort it the way I want to see it. But just bear in mind, if you did this and you did a sort, all this data would be screwed up. It wouldn't be part of here. It would only sort these rows, or the data in these rows. So make sure when you do a sort, you just kind of go all the way to here. Now, technically, you could just hit the whole thing. It will mess up this data won't be accurate anymore. But when you go back to the original way of looking at it, it will be. I'm going to sort to try and freeze this up here. That would be the way to go. Yeah. All right. Well, there's got to be improvements to it, so we'll look at it here. Okay. All right. Any other input on this? And if not, I'm going to go ahead and get rid of this spreadsheet. We can always come back to it. And now we're going to talk about open trade management. Now that you have a tool that'll identify all your open trades, either simply that they're open or by expiration date, by earnings, even by, G&L, whatever one of those columns you want to sort by. Paul has I have a parallel copy for what if comparison. Says, what if I had taken the next later expire, or what if I had taken an option closer to the money? Oh, really? That's nice. So you're populating it with the data. You're actually following the results of 3 trades there then. You got your trade and then the others. Yeah, absolutely, Alex. You can everybody just email me with ideas. All right, so let's talk about how you're going to handle some of this stuff. First of all, you should be starting every trade with a predetermined plan covering 3 decisions. How long do you, what's your time horizon on it? What's your entries and what are your exits? These are decisions that should be made in advance. And I'm not recommending what I'm going to show you here, but I'm just going to give it as an example. Your time horizon rule should be when are you going to get out of it? It could be at expiration. It could be when I hit T3. It could be a week before expiration because of time decay, but definitely draw a line in the sand and say, what is your time horizon on the trade? And then you have entry rules. When are you going to get in? And again, not recommending anything. I'm just giving you an idea. I like to get out in thirds or fourths or fifths even, but for sure thirds. And, I typically don't wait around for a chart feature to enter a UOA or an IE. I go in the next day. I want to be as close to the start as possible. I've heard from some teammates that they don't like that because they want to wait for a dip in price or demand to get hit or what have you, and that's fine. Everybody's unique, and your entries and exits are personal. So find what resonates with your personality. But I like to go in. I like the options to settle a little bit. In the beginning of the day, they're kind of funky, the spread and the pricing. So I go in, generally around 10, maybe a little earlier. And I start negotiating price if the spread's a little wide with limit orders. And I'll let that limit order sit for considerable amount of time, 30 minutes, hour. If it doesn't fill, I'll go in and adjust the price. If it's a tight spread, I'll just go mark it in and be done with it. But again, not suggesting, just saying that you need a time horizon, you need entry rules, and you need exit rules. Your exit rules might be something like, I'm going to take a third off when I double. I'm going to take another third off when I triple. And I'm going to let the final one go to expiration. Just don't follow this. Just go ahead and determine answers to these basic questions. That will be your plan for the trade. Now, market conditions change, and that may require changes to these rules. And I've just listed a few possibilities here of questions that you need to answer, and it's best to probably answer them in advance if something happens. All right. And then I'm going to ask for contributions of things you've seen that required you to make a discretionary decision on the rule set. And we'll add it to the list. But here's a few that I just came up with. All right. So I got this UOA. It looks really good the night before, but the stock gaps up the next day. And the price of the option is way above what the speculator paid. What's your rule? Do you pass on the trade? Do you take the trade by adjusting your position size? Do you wait for a pullback? Maybe there's other decisions, but you need to know, and you should have it in your plan in advance. If it gaps up, what am I going to do? What is your process for dealing with that anomaly? Same thing on a gap down. Now it's below what you were willing to pay. Clearly, I mean, you could pass. You could say, well, I don't like that momentum anymore. Maybe it was a big gap down. Maybe you still like it and you would be able to increase your quantity. Or maybe it was a big gap down. You said, I'm just going to feather into this a little bit and see if it doesn't start to come back, and then I'll add. So you see, there's a lot of ways to get into the trade when it gaps up or down, and those are decisions that you're better off making, at least, call it a standard rule in the plan in advance, so that you're not sitting there, deciding in what could be an emotional state. You want to avoid emotional states as much as possible. So that's one example. Here's another one. The stocks, you're in the trade, the stock's trending down, and the option becomes nearly worthless, but it's still liquid. What are you going to do? Right? It's on your list. It's an open trade. You got to put an action in today. You look at the chart, it's funky. Do you just say, all right, I lost most of my money, I'm going to let it run to expiration? Or do you get out for a dime or 15 or 20 cents and take something out of it? It needs to be a rule. You should kind of, have an idea in advance what you're going to do when that happens. Why do all these rules as I'm describing them? Because it'll cut a bunch of time off of what you're trying to achieve here. Going in, once you have 20, 30 positions and trying to analyze each one and put an action item in for today if there is one. When you run across situations where you have to think about it, don't know what to do, it's just going to take you more time. And I don't know about you, but time is precious for me. So I like to have some of these things, kind of perfunctory, just like done. All right, it hit 15 cents. Chart looks like hell. I'm out of here. So think about that one. Just the opposite can happen. The chart goes parabolic immediately. What are you going to do? You're going to take the whole position because you're fearful it's going to come falling down tomorrow? And if you do that, are you going to rebuy it and keep it on your list because the expiration on the UOA was 3 weeks from now and it still could make it there? You just wanted to lock in the big gain? Or do you just say, no, I'm just going to follow my rules. It hit 2 targets. I'll take my money and leave one for continuation. And again, there may be more answers to these questions than I'm listing here, but you got to think about them. And you should have something written up on what you're going to do. And then, I've seen this plenty of times too, as a catalyst failure. It was an earnings play. Earnings were okay. The stock didn't go down, but it didn't react like you wanted it to. So you got this option that may be a little bit of a loss, break even, a little bit of a gain, and you got 4 weeks till expiration. What do you do? Do you hold on because you say, well, I've got time, maybe it'll go up? Do you analyze the chart and say, well, where are we at supply and demand wise? Where are we at moving average wise? Or do you just exit it because the catalyst came and went and nothing happened? So the thesis was it should have happened. It didn't happen. I'll just get out with a 5% loss, an 8% gain, or whatever it is, right? So those are some scenarios that I've experienced in this that I wanted to point out where you can answer these questions. And then now I want to hear from you guys and gals. What did you experience that you had to sit and think about that doesn't fall into any of these 4 categories? Open up your mic and let me know. We'll type it in. Or type it in the chat window if you don't want to speak. Hey, Scott.
Hey, so what I have realized over time is that there's an art in all of this, and inevitably it's a subjective decision given all these rules. So you line all these up, you make a choice, and then you're either profitable or you're not. So interesting when I'm listening to somebody like you've traded a lot, obviously a lot more than me, that there's a decision process that you have brought together in in all of your trades that have led to a profitability stated that it's doubled your account in 1 year. I am not experiencing those results. I basically am making choices based on my trading experience, but I'm really interested in understanding the results of the choices you're making because like a dance, there are specific things that you're doing that's producing a result. So I can go and try to figure out, what works for me, but more importantly, what works for profitability. And so I'm asking to lean on the greater experience that someone like you have. I did the same thing, for example, with Bob Dunn and, people that have been doing this a long time. So I am very interested in what you specifically are doing. Not that you're telling me what to do, but more importantly, the decision process made that produces a more positive result. I'm basically gaining, but I'm not gaining at the rate that you're gaining. And so I'm also running through great periods of time where it's a loss, it's a loss, it's a loss, it's a loss, and they're not big losses, but they all add up. But then all of a sudden I'll have a gain. And that gain, again, as stated, was getting to the gain is so big that it pays for all those losses. I'm not seeing that. I'm not seeing the great gains that are covering all of those other losses, and that could be market condition, meaning that 4 times a year, and I'm hypothesizing here, Like 4 times a year, we see these gains where I'm making 2,000%. But then the rest of the time, you got to sit and be patient. So I'm looking for some insight into your personal experience. Um, Otherwise, it's just kind of a guessing game, really.
Okay. Thank you for all those questions. I'll try and remember them and get through them right now, but you can always ask again. So,
Yeah.
the first thing I want to say is that there are no two traders, no matter how much a trader or instructor or whoever gives you their rule set, that you will ever duplicate what they do. There's so many variables. And as you already mentioned, Scott, there is that subjectivity, there's that feeling, there's levels of experience in terms of having done it hundreds of times, thousands of times. So, I can offer you the rules. I'll tell you right now how I deal with each one of these. But I will also say that uh, don't copy Mike. You copy Mike's rules, you can copy anybody's rules, but uh, you're gonna. I can't. I'm not here to promise anybody that they're gonna duplicate what I do. I can't. That's just the way it is. So as long as that's understood and everybody's okay with me sharing this and not saying be like Mike because you want to get Mike's experience. I will tell you this. There are people in this room right now that have done way better than me. I know because I've gotten some testimonials on how they got out of trades and how I got out of them was way less. So, there's that too. But to your point, let me just do this. To your questions, I should say, not your point.
Say that I really enjoy the strategy. I just have not refined the process now to the point that I'm getting the results that you have been getting. And so I'm looking to understand, and it's each one, there's no magical answer. I get it. But at the same time, it's a kind of the trend of action.
Yeah. So here's what I've determined after 18 months of doing this. Okay. If you don't have a broad portfolio, uh, I'm not sure how you can do this. You'd have to be really good at picking stocks and conditions. And I don't want to say that I am. I choose to let the math of it kind of take care of it rather than me worry about, well, this fundamental news came out and it's not a good stock. And I know there's people here who like to pay attention to that. And it's valid, if it works for them, you got to do it. Um, but I don't want to do that. I want to let the math take care of it for me. So here's my experience out of whatever that is, 214 trades, 240 some trades. Uh, 38% winners. Okay, so to your point, I'm losing more often than I'm winning, but my losers are less than half of what my winners are, which gives me an overall account risk reward of 2.25 to 1. 1 to 1 would be break even. Understood, right? If this number was 1 to 1, then you'd be breaking even. If it was 1.5 to 1, you'd be making a little bit of money. But when you're doing two and a quarter to 1, only winning 38% of your trades, that's just telling you that your winners are, bigger than 50%, more than 50. Your losers are less than 50% of your winners. So that's what's been working for me. Now that number has gone up and down over the last 18 months, and it's gone up and down, not tremendously, like as low as 35% winners, as high as 42%. And that goes to your point, Scott, about the streakiness of it. Like I've had drawdowns. I've had the account go up to here and then all those losing trades get booked. And then I had a couple of winners and then some small winners and then some losing trades get booked. So there's some cyclicality to it. And this is where it comes to a little bit of the psychology of trading and understanding this about any strategy you trade. You must not focus on the outcome of any one trade or series of trades. You must focus on the process because there is no such thing as a 45-degree equity curve. We're dealing with chaos when we're dealing with the markets. All we can do is probabilistically get something that trends up over time, right? And also make sure that our losers are a number we can accept, even when we get 6, 7, 8 of them in a row, because they were small enough and we didn't care. I personally don't want to even think about the losers. I mean, I'll go back and see, hey, should I have taken this trade? Did I make a discretionary decision that was stupid or something? I'll do that in my review process. We'll go over in a couple of weeks, but emotionally, when every trade I put on, I want that to be a check that left my checkbook and isn't coming back because I don't care. I don't want a reaction at all. That's just me. Other people would rather, maybe take bigger risk and manage it. If that's your bag, then do it. You got to find yourself in this. So I sized down. This account, I could be buying a lot more than 6, 7, 8 contracts. I'll tell you. But I just want to keep my risk where it is and slowly move it up as the account gets bigger. It's my happy place. Right. So concentrate on the process and do know that this process is going to have streaks that go up and down. And I don't see how it would be easier to do it by maybe taking and building a portfolio of 4, 5, 8, 10 positions at a time. I got up to low 30s at one point, and I said too many. So I dropped it down and maxed it out at 15. And I went into a drawdown. I said, no, that's not enough. I'm missing some winning trades. You just think about it. If 35, 38% of your trades are winners, then you need some breadth to be able to make it happen. Hey, look, the best trade we had last year, Apploven. I didn't take it. I have no idea why. I look back, we had picked it. We had said it was a trade to take. Maybe because I run that futures room in the morning and I was busy doing something else, it slipped my mind. I never got in the trade and I missed a multi-1,000% winner.
Mike, I have a lot of trades, and I've basically, in light of what you said, and I agree that there is a need to take, because it's kind of like fishing. In the end, we're going to catch the lunker at some point, so you don't want to miss out. So I've been taking a lot of trades, and you're right, around 30 trades sitting on your management screen is a lot to consider every day. Uh, so that's not really a concern about, taking the trades, but at the same time, it's really understanding the flow. And so when you see, I mean, the statistics are, 30% are winners and those 30% are great. Well, the conclusion is this: 30% are winners. I'm experiencing that, but the 30% have not been great, meaning they're not to the result that you're describing. So now the question is, should I be taking more trades? Should I be looking at it a different way in how either entry or exit come in? But that's largely a guessing game unless there's an experiential type of description.
All right, let me interject real quick. What is your exit plan? It sounds to me, if you're taking all those trades and you're not getting any big winners, it sounds like you're rabbiting out of them too quick.
Well, I have had all of that. I've had some where I'm like, okay, I'm hitting a particular either supply or demand zone, or I'm seeing the nature of the chart telling me that it's rolling over, and so I'll scale out. I'm following those rules, and I'm basically doing what I do in other ways because I have a number of strategies that I trade. So I'm following all that, but it's if I just correlate, the 2.25 to 1, I'm not getting that result. So either it's a market condition based on where we're at in the market now, meaning the way the market's moving now, or there's something I'm missing, and that's the ghost I'm searching for.
Okay. All right. Well, let me
I
tell
did.
you, since you asked me, what do I do with these rules here? Okay. And just and then I'll also answer to you about exits. Um, if a stock gaps up, I end up not taking it. I just feel like I missed it. And I don't have the time to devote to this strategy with everything else going on in life that I keep it on the chart. I keep it in my watch list and wait for a pullback. I should. I would. I just am so jammed in terms of all the things going on time wise. So those I miss. If it goes down, I increase my quantity. I take the trade and I buy more of it. All right, that's that. I do not get out at 10 cents or 15 cents. I let them go all the way to expiration just in case something happens. Why? Because I sized it to what I wanted to lose in the first place. Some of them come back, some of them don't. Stock chart goes parabolic. I take almost all the position off, but I do leave something for a continuation. I don't have the time to analyze it the next day or week and rebuy on the dip. I should. It's the same as this, right? Catalyst failure. I keep the trade open. I got 4 weeks till expiration, and anything can happen. I'm going to hold it and let it go. I like to go to expiration and close to it. I don't really care too much about theta if those are in the money. When they're in the money, the time decay is kind of meaningless. It's small. And when they're in the money, you're making a lot of money. So there's no reason to get out in my eyes. I do not, once the trade is open, worry about supply and demand on a chart. I do not worry about technical analysis on a chart. The thesis for this strategy is someone knows something and it's going to go up. And for me to add in a different rule from a different strategy like SD zones, which I appreciate and trade, but to add it into this thesis, I don't. I don't consider it. Just like I don't consider waiting for an entry because I want to see it hit demand. That to me is adding in strategy rules that, while quite good, and I trade them, but I'm not going to get all the opportunities that I had here. And that's pretty much it, Scott. Sometimes I'll maneuver the T2 or the T3 a little bit based on, the momentum in it. But, in fact, I'll show you this one here. An
Question I
example.
have there, if you don't mind.
What?
There's a question I have, if you don't mind.
All right.
And you're predominantly entering at the money, right?
No, I'm way out of the money. These are UOAs. There isn't a UOA that's more than 35 delta. So
yeah. Sorry. I was thinking about insider edge stuff, specifically insider buys.
okay. All right. You're asking the question on insider's edge.
Yeah.
Sometimes I'll go at the money, but the real thing I like to do with that is like this is not a good example here. That's Apple. Let's see. Something less. Okay, so let's say I had an insider's buy here on IRM, and I wanted to go out to March. At the money would be 115. I would buy the 125s because of the extreme open interest at that price.
Okay.
That's how sometimes I'm at the money, Most of the time, I'm slightly out of the money like that. It just as an answer to your question. But here, let me just show you something. I scale out, okay, and we're looking at the Palantir trade, which everybody knows was a multi-1,000% winner. I was in that trade at 29 cents. I wasn't confident that it was going to happen, right? My mindset was, wow, that thing's got to go from 42 to 65 or better, really better than 65 in the next whatever it was, 2 months. So, my monkey brain tells me that's not likely to happen, completely ignoring the fact that a UOA is somebody knows something. That's the thesis, right? So I just said, I'm just going to go half a position on this one. And I bought 10 contracts at 29 cents. And it went up, in 3 weeks after doing nothing, it doubled. So what did I do? I took half my position off at a double. Then it goes here. And I take it, I go, now this thing's really got some trend. So I got to, start to peel off the hundreds and not take off all 500. And I ended up getting 5 and 460. Okay. So what did I get out of the trade? 800%. That's nice. But guess what? Those who held anything to expiration or got out on the charts, those big moves up, they killed it. I didn't kill it. So it's not necessarily something I'm doing, Scott. I think it's a combination. Can't see. Let's just look at the chart. Here's the Palantir chart. We got in, right around here. And then it slightly went up 10. Now. You got in around here. It went up a little bit. That's when I took that first tranche off, came back down. Earnings came out. I mean, this thing, let's see, that's December 20th here. Long about here that day, that I could have made a ton more money. I know it, but I didn't. So I guess I'm just pointing that out as even the big winners did not get, what's this? Didn't get it all,
And on UOAs, you're sitting with wherever the UOA is. You're not going further out to offset time decay. You're pretty much taking the UOA right where it's at, right?
Yes, and I don't
Okay.
know that that's the best.
Okay.
That's just what I've been doing, and
Agreed.
I like the idea. And I'll tell you, I know a lot of people out there are taking expirations beyond the UOA expiration, not only for time decay, but just in case, the timing of the thing happens a little later, maybe, you know. And again, and I always say this in every one of these sessions, if you look at, these options here, if this is a UOA and you think it's going to happen, well, guess what? All of these are going to go up.
Yeah, agreed.
And then the same thing on the next expiration. Those are going to go up too. So there is some research that needs to be done on these different ones, like what Paul had typed in the chat window up there, where he said, he's keeping track now of a different option on the same expiration and those options on the farther out expiration. This is great stuff. This is something that I should do as well, is just keep a look at it, because that may be better.
Well, I appreciate those comments, Mike.
Yeah.
Not to put you on the spot or anything, but it's just the subtle nuances that ultimately can make a major difference. And that's what I'm in the process now, after being at it for almost a year, of really refining that process using these subtle elements. That's why I'm asking.
Okay, so just out of curiosity, did you get into did you have those big trades last quarter, the Palantir and the AppLovin?
I did not. I was not in AppLovin, but I was in Palantir, and I'm like you. I ended up scaling out of it, and of course, hindsight tells me, "Gosh, I wish I stayed." And that certainly was helpful with respect to paying for some of the others that were lost, and then showing gains. But then there's these dry spells, and this is the thing that I don't have enough experience with this strategy to watch the dry spells and go, okay, is it a market condition that's producing a result? In other words, there's a UOA as an example. When you're at the top of a market, there's a UOA and you say, I'm going to get into it, but then there's apprehension in the market. And so people are less likely to jump in. And we're looking for that big ride, that big, everybody jumps in for FOMO reasons or insider knowledge or whatever. And so the end result is it does not climb because of overall market conditions. And that's the piece that I'm wrestling with right now is the wins have not been substantial enough in the last say 3 months. And is that because of market? Is it what I'm doing, or is it just the way it? I mean, that's the subtlety that I'm hunting for.
Okay, all I can tell you is my equity curve has been really good. It was bad in May.
Uh-huh.
Had a drawdown. It was really good from November of 23 till April of 24. And then I lost 50% of it in about 7, 8 weeks. And then got it back up a little bit, dropped again in August when the market went down. But the last 3 months have been superb. So
Okay.
it's just maybe it's the ones you're taking, and that's a tough one to,
Yeah, fair enough.
yeah.
In other words, I'd like to peg like I follow the S&P and you peg to something. If I peg to the S&P and measure my performance against that, I'm doing fine in other trade styles. So I'd like to consider you my S&P. So if I can peg to your performance, then I know that ultimately we're growing at a rate that is indicative of somebody who's, traded a lot more than I have.
Yeah. So I just appreciate it. I walk a fine line here teaching
I
this
get it.
and
I
not
get
being
it.
licensed to give individual advice. So
I agree.
don't want to be in any trouble.
No, I hear that. And I'm just asking these questions as I would in any other
Yeah.
class. So,
And I'm answering them for everybody. So I
yeah,
appreciate it. And I welcome the questions. Just want to make sure everybody knows I'm not licensed and it's not individual
agreed.
advice.
Agreed.
Okay.
Mike, it's Nancy.
Hi.
Uh, since I'm not licensed as a totally unschooled trader, the other approach that I think people could think about, by the way, I do what you do, where I scale out. But the other approach that some do is buy a number of contracts. Doesn't have to be 10, doesn't even have to be five. But let's say they buy three contracts, they always get out so that they cover their initial investment in the premium as soon as it goes up, right? So if the trade costs you $300, as soon as you have 300 in profit, that's your T1. And then they let everything else ride. But at least you get to the point where you never lose money on a trade unless it goes against you. And then sometimes they tranche in at a lower price to dollar cost average, and then let it go from there.
Yeah. And you could go in at a higher price too. I know traders who would never buy at a lower price, but who would absolutely buy more as it went in their direction. It's just a style issue and something you have to be, comfortable and confident with, right? So those are all good ideas. Let me take a look at the chat window here. There's a lot of typing going on, and I want to make sure we've got it all covered. Julie's saying spreadsheet available for download. Yes, it's on the website right now. I sent you an email to that effect. Paul's saying insider buys are on a much longer time frame. Most of them, yeah, for sure. Different rules. Yeah, the UOAs, technically the definition of a UOA is it's going to happen, it's short dated. It's way out of the money and it's short dated. That is the definition. By the way, way out of the money is, 35 or less deltas. You've got to be able to adjust your thinking when you go over to IE or even SD zones, which I'm taking trades on and saying, now I got to forget about the theory of UOAs and I got to go back to traditional options. And I am concerned about theta and I am concerned about, IV. And so I've got to, be completely different in my selection with those. And those are for IE. Yeah. Kate saying, I can relate to what Sky would appreciate more guidance about how to deal with the various details. Okay, so I did that. I'm talking lots of mechanisms. WhatsApp and write what they are doing as they do. We can teach each decide whether to follow them or not. Man. That'd be so great. All right, so we'll start pounding out some stuff in and there is in WhatsApp. People are doing that. Kevin does it. I do some some answering of questions there. Use WhatsApp for that. I want you to use WhatsApp for two things. I want you to boast about what you're doing, what your wins. Okay. I want to know that that's happening. Okay. I want you to ask questions and look for education on trades and get just like we're doing here, because that's in between these Saturday sessions. Those two things should be populating WhatsApp. I want it to be busy. Carlo, IE has more info through the Form 4. So evidence UOA is about intent, and that is a challenge because the decision to pay the offer does not give you enough info about the buyer. Yep, no question. All we are is getting a hint. The Form 4 is definitely evidence. And I will tell you this. A lot of those Form 4s are going to be outside funds that are investing 10% owners, and they're in it for the long haul. So's the executives, but the very best ones are going to be the CEO, chairman of the board, CFO. It's going to be those C-level executives. I like keeping it to expiration as an attitude for a loser. Often there is a bounce in my favor near expiration. Okay, good.
Hey, Mike.
Yes.
This is Andrew. So this is going back to the beginning, Insider's Edge, even before we had the options that much with the UOA. Looks to me like time horizon and what you just mentioned, the 10% and directors and so forth, that it's important for me because long haul. For me, this is not long haul. It almost gets to a point where you have a trader or you have an investment. And trader for me is short term, right?
Okay.
Do you agree with that?
Yeah, a trader just has a plan with rules of entry and exit. It could be a year from now, but they're an investor in my mind is just someone who is in it for, call it forever. I'm buying Apple and I'm not selling it,
So these are all trades. This is all
all
short
right.
term.
That's just my definition of a trade.
I know, mine too. Well, my question or my comment is that at some point, this trade is kind of short term. If the pop didn't happen after you get into the trade, and I see that it's not going to happen maybe within the next week, 2 weeks, 3 weeks,
Well,
4 weeks.
You don't know that. Now you're.
Oh, I know you don't know that. You don't know that, but that's what you're thinking because the insider edge people, they made their bet and they want their return, correct? I mean, when you go to a gambling table, it's kind of immediate. for me, I would think that these people that are putting millions or hundreds and hundreds of thousands of dollars, uh, like you just said, are they going to go the long term? Are they going to, 6 months on that form 4?
I know
They
you've
have
asked.
to they have to be in for 6 months, right?
Well, that's what their intention was. Yeah, and
Their
most of them are.
intention. I like that. Yeah,
Well, no, it's
intention.
true. I mean, I didn't, when I was an insider, there's no law that says I can't sell something I own. But there is a rule that the SEC says that you intend on holding it for 6 months.
Hmm.
Well, I
The one
didn't.
thing for me is options is when I look at the uh, the options chain, uh, open interest. When you like you just showed earlier, open interest tells us that, aha, these guys think's going to happen, and they're not going to not put their money in there, without some kind of return. So that's
Okay.
what we follow, right?
Yeah. Well, just bear in mind, the options market is a contract market. That means that even though there's 31,000 contracts of open interest here, someone sold them because they don't think it's going above there, and someone bought them because they do. And we
Uh-huh.
don't know who's going to win that battle.
But
That's
it's active. It's active.
Yeah, no, it's
There's
liquid for sure. There's no
it's liquid.
question. We're,
So
you don't have a problem trading it. I'm just saying that you can't just necessarily say that because there's 31,000 contracts at 11 that it's going to that they bought that those were initiated by buyers. They might have been covered calls by an ETF, and that's what we try and ascertain when we go down to the individual candidates that we're going to look at next in our next recording here, right? So yeah, lot of good ideas. But let me tell you about the IE.
I I
And
can't understand you.
what?
Something's going on with my mic or yours.
Oh, my mic okay? Everybody hear me? Type in the chat window if I'm okay.
Yeah, I have no problems with your mic.
Okay. All right. Mike's Mike. Oh,
Yeah, it's probably mine.
there is just as many losses in IE as there are winners. The winners sometimes come immediately. Sometimes they take a little time. Sometimes I take them off the list and I don't have any idea. I don't go back and take a look and say, well, did it happen for them? So the fact that an insider knows more and is buying it is no guarantee of anything, as we know. Things change. Look, the Detroit Lions won 15 games this year, and they lost to the Commanders in a wild card game. That's weird. Now they lost multiple coaches that got them to 15 wins. Does anybody, I mean, that's a fundamental change in that team, and they had no idea that was going to happen. Same thing when you look at trades, right? Some are winners, some are losers. That's why it's incredibly important for your loss to be something that you just don't care about. If you're at all worried about your losses, you're risking too much. And that may offend you because you look at it and go, but Mike, I make, 350 grand a year. I've got 4 million in retirement. I'm doing this. I can afford. Hey, it's got nothing to do with that. It's got to do with what is your emotional reaction to a losing streak. That's what it is. And so start small and build yourself up as you get confident. But please don't fret about losers because it'll totally mess up your performance. Okay. All right. Getting back to this, is there anything else, any other condition, right? So what I'm going to do.
Mike, I had a question about a condition.
Okay.
Letting, in the relatively short, let's say 6 weeks to 2 months out, the bell curve of time decay and whatnot starts hitting hard in that last third. That's just the nature of math. And so letting it run to the end, do you have any data that suggests, like it's half the time, and I'm guessing at that, like half the time it'll come back in the last 2 weeks? Or is it okay, we get to those last 2 weeks and the people are, start moving out of that contract. It's what I'm noticing. People's just the volume drops off and they start moving into whatever the next contract is. And so it's not just an issue of time decay, it's also volume drops and therefore you're stuck.
Yeah,
So I'm wondering in those last 2 weeks, and it could be 3 weeks, it's not an exact number, that you go, okay, it's just time to leave this because the probability of it coming back appears to be really small. Now, my data set is not big enough to have an answer to that yet.
yeah. So let me clarify this based on what you just said. Like the January 17, I believe it was, right? 24. Yeah. The January 17 expiration, I had 6 trades expire worthless. If a week or two before there was any money in them, 20 cents, 25 cents, I would have taken them off because I've been in them for a while and they're not moving. And now I've got significant theta, and any kind of money back and taking a slightly smaller loss, I will do. But most of the time, they're so underwater that there's no bid.
Yeah, exactly. That's what I'm seeing.
So the ones that are no bid, I'm not gonna go in and try and do anything with it. I just let it go to expiration and maybe something happens. Now, I would say that 90% plus of those just expire worthless. Once they get to that point, it has to be some real miracle catalyst that all of a sudden happens. Those are just, you write them off. They're your loss, and that's why you want to make sure you're risking the correct amount for your own emotional reaction. And multiply that amount by 6 or 7, because you will have that happen, just like I did a couple weeks ago. But hey, and then I add different ones to the portfolio, right? Right. And what happened? Let's take a look here. So I got these that are worth nothing. HWM, that's pretty new. It's up. TKO finally kicking in. Schwab, I'm almost out of it already. LRCX. So enough of them were winners to make the and the losers were all counted already in the equity because they were being marked as a full loss. So, still going up on the equity curve. You just got to keep plugging in new ones. What I did was I copied and pasted this information into the chat window. I would suggest you copy and paste it before we leave and get back to me with some of these conditions. These are the only 4 that came to my mind real quick this morning. What is the condition that changed that now I have to make a discretionary choice? Okay. All right. And with that, I'm going to sign off on this training lesson. And I'm going to take a 5-minute break, and we're going to come back and pick some trades for Monday. So stick with me.